Every time Jerome Powell speaks, the stock market freaks out like a teenager at a Taylor Swift concert. One word, too hawkish, stocks crash. One word, too dovish, crypto thinks it's going to the moon. Powell's back on stage at Jackson Hole, and investors are biting their nails like he's about to announce the new season of Game of Thrones. But here's the thing, it's not just about Powell. This happens every time the Fed decides to speak. And today, we're breaking down how a few words can move trillions in the market, why markets freak out like it's doomsday, and what you should actually pay attention to when the Fed grabs the DJ mic. So why does the Fed have so much power? It's like just one guy talks and it moves trillions of dollars. It's simple, because the Fed controls the price of money. And when you control money, you control just about everything. The Fed sets interest rates, and that decides how expensive it is to borrow things like money for a home, for a car, for loans, for just about everything. Raise rates, people stop borrowing and spending. Lower rates, and basically the money printer goes brrrr. So think of Powell of like a DJ at a big party. But this party is the global money party. If he slows down the beat, everybody leaves the dance floor. And if he cranks it up, everybody's dancing wild and ordering bottle service. That's why the markets hang on to every word, and they listen to every word very closely. So he's not just making speeches, he's literally deciding how easy or hard it's going to be to basically live, invest, and to do business. So let's talk about why the market hangs on to every word. And here's the crazy part. The markets don't just react to what Powell does, they react to everything he says, even what they think he might be saying. Traders don't just care about today, they care about the future. So every tiny word, eyebrow raise, or pause turns into $1 billion bet for investors. For example, if Powell says, "We're watching inflation carefully," Wall Street hears, "Oh no, more pain is coming." And if he says something like, "Inflation is under control," suddenly the stock market acts like they just won the lottery. And the truth is, sometimes he's not saying much, and it's just markets overreacting, like Twitter to a Kardashian scandal. That's why one speech can do major swings for stocks, bonds, and crypto, because investors are basically professional overthinkers with trillions at hands. Let's talk about some past examples of this. Oh yeah, and that's because Powell's words have definitely crashed markets before. In 2022, he basically gave an 8-minute speech at Jackson Hole, basically saying that inflation is bad, and rates went higher. The result? The stock market collapsed harder than my diet after Thanksgiving. Other times, just hinting at a possible rate cut sent markets flying up. Just one line in 2019, and markets were skyrocketing like they just won the lottery. And one small hint about policy can be taken as traders flipping burgers or ordering bottle service at the club. So yeah, one speech, a couple words, and boom, trillions of dollars wiped out or created. Kind of makes you wish your words had so much power, right? Imagine like telling your boss, "I'm cautiously optimistic," and boom, your paycheck triples. Let's talk a little bit about the fear and the hype. Here's the thing, markets usually freak out even before Powell opens his mouth. And when nobody knows what's coming, usually the safest thing to do is to just take risk off the table and sell everything into cash. And you see this usually in pre-speech sell-offs, and there's usually high volatility during the speech itself. It's basically everybody rushing into safer havens. It makes it look like Wall Street is just one big anxiety group chat. Until Powell speaks, they usually assume the worst. Then they just overreact either way it goes. So let's talk about what to watch for in this speech. Let me give you a cheat sheet of how to actually decode this speech. And there's 3 things you should look for. The first thing is the tone. Is it dovish or is it hawkish? Dovish thinks that the markets and the economy is weak. So dovish wants to cut rates, and this is actually good for markets and usually takes things up. Whereas hawkish is bad. They're worried about inflation, more hikes, and it's usually bad for the markets. So basically, dovish Powell is like, "Here, have some free drinks." While hawkish Powell is like, "Hey, the bar's closed, go home." So what do you think? Will Powell be dovish, hawkish, or just confuse everybody as usual? Leave it in the comments below. The next thing to look for is essentially the rate path, and that's if cuts or hikes are coming. Investors don't care about the rates right now. They care about what's to come. And the third thing to look for is the inflation language. Like, does he say still under control, or does he say there's a problem? That's a big market trigger. So like if he says inflation is sticky, traders melt faster than ice cream in Texas. So that's it. Tone, rate path, and inflation. It doesn't matter if it's Powell, Yellen, or the ghost of Alan Greenspan. Those three things decide if markets moon or melt down. So there you have it. A few words from the Fed chair can move trillions. And those being the three things you should always look out for when Powell grabs the mic. Powell's speech could send markets to the moon or down to the basement. What's your money on? Please hit that like button if you learned something today. And please also subscribe if you want no more BS market breakdowns. I'll see everybody in the next one, and hopefully not from my mom's basement. Thanks for watching. Cheers.